Good afternoon and welcome to the On The Market PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jason Tebb, CEO, and Clive Beattie, CFO. Good afternoon.
Good afternoon, and thanks very much, and a warm welcome on this very hot afternoon to those of you who've seen these presentations before, who are familiar with our story, but also to maybe some of you who are looking at our story for the first time. And we're delighted to report on these full year results to 31st of January 2022. I'm Jason Tebb, Chief Executive, and with me this evening is Clive Beattie, Chief Financial Officer. And this afternoon, we'll take you through some of the highlights from an operational and financial perspective. We'll do a financial review with some key headlines. We'll then give you a brief strategic update on what we've done, what we are planning to do, and where we aim to be in the future. And we'll finish off with a quick summary. And then, as mentioned, we will go to Q&A and we'll try and answer as many questions as you have. So let's start with the highlights. So just a quick reminder before we get started what we do. So we operate a very simple business model. We operate to connect consumers with agents and house builders. So we are, put simply, a property marketplace that's quite often referred to as a portal. And that means that our estate agents, letting agents and house builders advertise their available properties for sale or rent on the site. And then we attract consumers to the site who visit it and then choose properties that are suitable to them. And we generate leads and make sure that there's an interaction direct between consumer and our customer. It's a market with significant opportunity. They're estimated to be somewhere between 18 and 18,500 estate agency branches in the UK. And even in really difficult markets or challenging markets, there still seems to be somewhere around 1 million residential transactions annually. Obviously, that this year's been highly abnormal, and last year was too, but it still averages out at around 1 million. And there's also estimated to be somewhere between 2 and 2.5 million private residential lettings transactions annually as well. So a significant business and a significant opportunity for us both now and in the future. We've highlighted here just 3 main milestones on our journey. The first one was our launch in 2015. We launched in 2015. We moved to listing on the AIM market, got that placing in 2018. So the next milestone is just shortly after that. And then the third milestone on the right-hand side is where we are today. And as you can see, there's been significant growth in our business over the course of the last few years. We no longer consider ourselves as a challenger. We believe now we are a business of scale. We are a business that is profitable and cash generative. And as you can see from the numbers there, our advertisers who are listing on the site continue to grow. Crucially, on the second line, the number of branches under paying contracts has increased from 46% in 2019 to 90% as of the last point. And we believe that that does show and demonstrate that agents do value our service and find our service good value for money. We'll come into more information and some more details on that a little bit later. And of course, that's backed up by the increased traffic, website visits up year on year and continue to grow up to 283 million at the last point. So let's just remind everyone on the call of our vision, our future vision. So we know that the portal part of the business, ONTHEMARKET.com, is both profitable, cash generative, and is a sustainable business of scale. Our future vision is as a property technology company which provides services for agents, house builders, and consumers, featuring what we call internally best-in-class products and platforms across the entire property ecosystem. And we'll come into some more details about that a little bit later. But overall, we've had continued strong growth and really good strategic progress in full year 22. It's been a really positive year. We've grown in terms of our revenues. We've had record site visits and increased number of valuation leads, which we might come to a little bit later. And so we believe as a management team, we are taking significant steps forward in becoming a differentiated tech-enabled property business. Our continued growth in average revenue per advertiser shows that those changes that we made were well received. You'll see that acronym come up a few times. So ARPA stands for average revenue per advertiser. That's the average amount that we charge per advertising customer. We're also in a strong cash position, and we believe we're perfectly placed to support our long-term growth. And of course, demand for residential properties, as I said at the start, has been particularly high this year. But crucially, one thing to remember, the on-the-market business model does not necessarily get tied to property market cycles due to the way that we charge. We are a subscription model, so our agents and house builders subscribe to the site, they pay a monthly fee. We generate some other revenue from product sales and campaign sales as well, but that means we're largely protected from macroeconomic market conditions. So hopefully that gives you a quick summary of where we are and the year that we've had. So I'll now pass to Clive, who'll go through some financial and operational highlights. Thank you, Clive.
Thanks, Jason, and good evening, everyone. Starting with some of the financial results, a very good year for us, actually, and really a step change forward. So revenue's up just over 30% to 30 million, or just over 30 million. So a real step forward for the scale of the business. And as Jason mentioned, that's driven by our ARPA, average revenue per advertiser, up similar amount, 32% to £188. Within that, we've then had a contribution from new homes, which has been growing strongly, of 2.5 million. So initially, the business was purely a estate agency. Clearly, still the majority of it is a estate agency, but a growing new home segment, which we'll come back to. We had adjusted operating profit up 13% to 2.7 million. And then looking at the cash side, cash generated from operations of 3.7 million and a year-end cash balance of 8.4 million. And although that's down on the prior year end, which was 10.7, that reflects some of the investments we've made in the year. So in particular, we acquired Glanty, and there were cash costs associated with that acquisition of about 1.8 million. And then there were some other smaller strategic investments, and we chose to repay in full the furlough loans we'd had from the year before. So those all told came to another 800,000. So actually, had it not been for those investments, we would have retained a cash balance higher than last year. If I then look at the operational metrics, we had 13,732 advertisers at year end, a real business of scale now, significant property to show consumers, and that's driven 283 million site visits, a record year for us, and reflecting that very attractive property portfolio we have to show consumers now. Within that, importantly, we had agent branches paying. Jason showed that in the initial one. To start with, when we first came to market, we looked to grow the scale of the portal by offering free listings to agents to join us. But actually, those longer term free listings have now all ended, and we've got a substantial paying base now, circa 90%, over 10,000 agents are paying us. So again, a substantial step forward for the business in this last year. That is generating each of our advertising agents, advertisers, agents and new home developments, 117 leads per month on average. But importantly, within those leads, there are different, I wouldn't say quality, but perhaps a different value of leads perceived by agents and advertisers. And in particular, valuation leads are seen as very valuable. These are leads where you get a contact to an agent to either value your house or for sale or for letting. And in a market like we've just had, where new listings have been quite low, those have been even more valuable than they normally are. And so the fact that we've managed to drive those up 58% through some targeted marketing, some TV advertising, and so forth, has been very good, and we're very pleased with that result. I'll come back to new homes on the next slide in terms of the developments there. So new homes, as I say, been very pleased here. It was actually quite a tough market for new homes because a fair amount of new homes expenditure is what I would call discretionary additional advertising rather than just pure listing fees. So they may contract to have email marketing campaigns or other sorts of products and services. But because of the very exceptional demand we've seen over the last year, they haven't really needed to spend in the same way, because people have been selling developments very rapidly. Lots of people, you'll have perhaps seen stories of people queuing outside the sales office when it's waiting to open. And because of that, actually, I think it's been quite a challenging market. And so the fact that we've actually increased our share of the market with the development numbers up strongly and increased our ARPA, all of that has fed through to a very strong increase in revenues, 67% up to 2.5 million, as I say, in what have been quite challenging times. And we see more potential for this segment of our business going forward. Firstly, if the markets do rebalance a little and that exceptional demand lowers, we may get more additional marketing spend. And of course, we've still got room to grow that ARPA and our developments listed further. So that's been a very strong performing business for us in the period, but hopefully more to come. If I then look at the breakdown of the source of our revenues, you can see from the bar chart on the right that actually The blue is estate agency, and it's still the majority, or the large majority of our business. But new homes is increasing, and you'll see on the far right-hand side, we're now starting to diversify into other areas across our strategy, which Jason will come back to. But in particular, an acquisition we made of a business called Glanty, and potential revenue streams in perhaps the medium term as they scale up from that business. So a slight diversification, but agency is still the core of what we do. And then finally, if I look at the cash position, I touched on this, but basically we've been cash generative, operational cash generation for the last couple of years. And had we not invested that in Glanty and otherwise, then we would have continued to grow our cash base. And we see basically that we're in a strong position where the core portal and related services is cash generative, profitable business. And we are using that in part to fund Glanty. Glanty is an early stage business. It will continue to require support for a period to come. We think that is a good use of our cash, investing in that for medium-term growth. But fundamentally, we're in a position now where we've got good cash generation, strong balance sheet. We're going through a process, as you may have seen, where we are applying through the courts to increase our distributable reserves. And that enables us, perhaps in the future, if appropriate, to start paying dividends and or share buybacks. So very good position from a financial point of view, enabling us to consider opportunities for growth if they're there and they're attractive for shareholders, and if not, consider ways to return money to shareholders. And with that, I'll hand back to Jason.
Great, thank you, Clive, and really good progress being made across all those financial and operational metrics. Let's move on to a strategic update of where we are as a business and remind you of our journey and what we're aiming to do in the long term too. So first of all, the first part of our change process was to build the foundations to become a differentiated property business. There's a whole load of products and services that fit within this property ecosystem. So we believe it was most important, first of all, to build those blocks, effectively becoming our 4 pillars of operational growth, which I'll come to a bit later. The second stage is to really become and execute the strategy to become more than just a portal, and we'll come on to that in the coming slide. Ultimately, our ultimate aim is to become a one-stop shop for estate agents and house builders. There are so many parts of the ecosystem, so many touch points across the sales cycle and the letting cycle. We believe there is significant growth and opportunity within these other parts. You think about a menu of services. I used to be an estate agent. I'm sure that most of you may know that already. And when I was an estate agent up until very recently, I was having to log into 15 or 16 platforms a day to do my job. So CRMs, databases, client accounting, property management, financial accounting, social media channels, front and back end of the portals. It was very quickly a process where I was having to become an administrator rather than an agent. And so our ultimate aim is that at some stage in the future, we'll be able to consolidate some of those services, not all of them, but some of those services, to become a true one-stop shop for estate agents and house builders, to streamline that process, to make it easier, quicker, and more cost-effective to do their job. And as I said, the first part was about building those really solid foundations. And I'm delighted with what we've achieved in what is a very short space of time. Within the first 12 months of this operational and strategic change, we engaged with thousands of our estate agency customers across the country on a series of virtual town halls, listening to hundreds at a time. They were telling us what they wanted and needed from us as a portal. And really just the act of engaging with them at the start was powerful in itself. And many of the feedback elements that we had, many of the suggestions have made their way through to the website today and through to our product mix. So many of these suggestions about delivering that differentiation in our product mix has come from our customers, which we think is a really good foundation for the future. We also listen to consumers too, engaging with hundreds of thousands of those by various methods on our website. And we really culminated both of those things, customer and consumer, with the launch of our brand new brand, website, and TV and advertising creative. The new brand, we believe now, is fresh, modern, and engaging with the consumer. The new website, which we built from the ground up with a whole user experience refresh, new UX and new UI features, really focusing on the ease of use and the engagement with the consumer. And on the feedback that we've had so far, it certainly seems to be the case. If you look at the operational metrics, how our lead conversion has increased since we launched the new site, it has done so, and particularly around some other products and platforms, we know that that we are getting effectiveness in terms of our consumer engagement. And we believe, personally, we now have the most easy to use property search site in the UK. As I said earlier, that was supported by our change in our TV advertising creative, this time not so much focusing on brand, but focusing on specific deliverables. And that's why we were pleased to report in an earlier slide that our valuation leads increased by 58% year on year. That's because a lot of this TV creative focused on a very specific outcome, which was, if you are thinking of selling and letting and you're serious, please come to On The Market, visit our site and generate an automated valuation. And then you'll have the opportunity to speak to some of our expert agents in the future. And that's been very successful for us. We can very clearly map when we've run those TV campaigns to when site visits come to the site, and obviously when the leads converted into valuation leads from the back of it. So we're very pleased, particularly with the effectiveness of our new TV campaigns. Something else we changed was we changed the name of what used to be called New and Exclusive. Some of you might remember that New and Exclusive is a proposition that our agents choose to support us with. It's not contractual. They choose to list thousands of properties every month, 24 hours or more before either Rightmove or Zoopla. And that's very powerful for us because that really is exclusive content. And as we'll know from any business vertical in any sector, it's that exclusive content that brings eyeballs to a site and keeps them on the site. So we went through a process of listening to what our customers and our consumers thought about New and Exclusive. And some of the feedback was that we could make it more engaging for our consumer base. So in December, we also launched Only With Us. So Only With Us is the new name for New and Exclusive. And we've put little countdown timers on the site. You may have seen them. So when a property is listed 24 hours or more before Rightmove or Zoopla, there is a countdown timer that says it is on our site for this period of time. A first real mover advantage and a really clear call to action for those motivated buyers and tenants to register interest via our site first before it goes live on all the others. And the feedback we've had from rebranding this to Only With Us has been great. And also the metrics seem to support that. Only With Us is now just over 150% more effective than its predecessor, New and Exclusive. So we're very pleased with that outcome too. And then, of course, there was a load of other tools and features, products, service and functionality that we built on the site for customers and for consumers. Things like Ask the Agent, which allows you to register interest in a property before it's come to the market. Things like travel time search, which allows people to search by travel time on any public transport or indeed by car or by walking. Those small features, a list of them were produced early on in the Q3 last year, and we rolled out the vast majority of those with our new website release too. And that's had really good support and really good feedback from our customer base. So I think we've achieved a great deal already. But now we're at the second stage, which is really becoming more than simply just a portal. And it's based on these four core clear pillars of operational growth. The portal obviously will always be front and center. OnTheMarket.com is and will remain front and center of everything we do, will be the clear focus in terms of our product mix and differentiation to agents and consumers. But increasingly, we're developing solutions in the software space. Clive mentioned earlier our acquisition of Glanty, and there'll be a slide coming up shortly to explain how we're developing those software solutions in the future. We're also developing data and market intelligence platforms and products. There's an ever-growing thirst for data and market intel, not just from our customer base who are looking for better ways to target potential sellers of the future, potential landlords, but also from consumers too. There is a growing expectation that portals should be providing more information up front. The government is also supporting that as well. So we believe that we've got opportunities to continue with that development of data and market intelligence platforms in the future. And last but not least, communications and marketing tools. Who would have thought 3 years ago that people are now very used to engaging with agents virtually? They conduct virtual viewings. And we do have anecdotal evidence of some people now buying and letting properties just from virtual tour alone. So we believe as a portal, we're perfectly placed to help consumers and agents interact with each other in the virtual format, but also from a marketing perspective, help our agent customers do their own marketing campaigns. So we've launched a number of new products which help them develop their own brand awareness socially, and through social media and email campaigns, we can help them really expand their reach into their local markets. So we believe all those foundations are now in place to execute on those four core pillars. And we also believe now we're offering significant additional value to our customer base. The logos you see on the left-hand side are just some of the commercial partners that we've managed to build relationships with over the last 12 to 14 months. And that really means that now we're developing real tools, real solutions to our estate agents and house builders, solving real world problems and really helping them with their business growth. For example, we're helping agents develop valuation opportunities with our automated valuation model, which sits live on our site, as well as prospecting tools that we help them use to target potential sellers and landlords of the future. We're helping them win instructions by providing data and market insights so that they can go on a valuation with clear knowledge of every property that's around and available in their location, and real intelligent data about what has listed previously, what has sold, what has let, and what, for whatever reason, has come off the market. As I mentioned earlier, we're developing more marketing tools to help agents punch above their weight locally and really develop social products for them. We're helping with promotion and presentation on our site too, with a really good commercial partnership with Auto Enhance, who support image correction software, and they make sure that our images are looking as good as they possibly can online. And also, really, from our perspective, providing more information up front to our consumers. We've developed our professional services relationships as well. So, for instance, now our full rate paying shareholding agents can subscribe to Canopy. Canopy is a lettings platform that effectively provides tenant referencing, and just by being an on the market customer, you are entitled to full tenant referencing at no charge to our agents as part of the relationship that we have built. So adding potentially thousands of pounds worth of savings to our customer base. Finally, our agents were telling us through our town halls that they really want access to training and coaching. So we've been delighted to agree an exclusive partnership with Property Academy, and they are delivering bespoke training and development and coaching sessions to our full rate paying agents. So hopefully you can see that we're already building a really significant mix of product, service and functionality, which shows us to be incredible value to our customer base. I thought I'd touch on one example of how we're developing our software solutions. So as I mentioned earlier, we acquired Glanty in May last year. Glanty already had a platform called TechLet, and TechLet is essentially an automated lettings workflow. So everything that happens when a let has been agreed through to the point of move-in is covered by the TechLet platform. And there's lots of things to do between the tenant accepting an offer and moving in. You have to get a reference, you have to get a credit score, either conventionally or through open banking. You have to do anti-money laundering checks. You have to get a landlord reference. You have to get employer's reference. You have to register your deposits. There's lots of things in that cycle. And we really liked TechLet because it starts to automate that workflow to make it less time sensitive for our agent customers. And a lot of that can be automated through a direct contact with the consumer. What's really exciting for us is that we have been, over the last 9 months, developing our own proprietary CRM solution, customer relationship management solution. That's in beta test at the moment. It's very close to launch, and we're confident it's going to be delivering significant value to our agent and house builder customers. And ultimately, what we want is for the CRM part of the business and the portal part of the business to seamlessly integrate with each other, to make sure that the two are communicating seamlessly together, to really speed up the process of customer interaction from our agents. And we believe that there is significant value in offering those as a package as well, portal and software. And we believe that's very powerful for now and for the future. So we're very excited about how that will develop over time. So you can see we've done a load of things in a relatively short space of time, but ultimately what we want to become, as I said earlier, is this one-stop shop for agents and house builders. If you look at this slide, we've highlighted a number of the key milestones throughout the sales and lettings transaction cycle. That's not every milestone by any means, but it's the ones that do overlap between sales and lettings. And as you can see from the slide, we've already started to build in solutions to each of those points, those touch points with the consumer. But as you can see, there's still a load of opportunity to go at. So whilst we're really pleased with the relationships we've built so far, with the products we've built and launched to our agent customers and to consumers, we're even more excited about the future because there are so many touch points in this ecosystem. And our vision of having a large menu of services that agents can choose from, making their business easier to run, quicker to run, more cost effective to run, is a very powerful statement. And we believe that there is opportunity to do so. And whilst this isn't in the short term, we're talking about the long-term big picture now. There's no reason why us as a business who has the engagement of millions of consumers every month can't start to think about what happens along the consumer journey too. We regularly sit within the top 100 most visited websites in the UK. We sit somewhere between position 50 and position 60. That is significant. There are many businesses who operate in this consumer sector who would love to have the website visits that we do. And furthermore, we know that those website visits are from serious property seekers. How do we know this? Because we measure it. And in our last property sentiment index, which we run every month, we had a recording of 75% of active buyers in the UK who visited our site were confident that they would purchase a property within the next 3 months. And even more so, 82% of sellers who visited our site were confident that they would sell their property within the next 3 months. So we're not just talking about visitor numbers. We're not just talking about eyeballs. We are talking about a captive audience of serious property seekers who are looking to transact. And therefore, my long-term vision and our long-term vision as a management team is to really start to explore those consumer monetization opportunities as well. But at the same time, making sure that we deliver for our agents. So the ultimate aim will be to help our estate agent customers earn additional revenue for themselves by us facilitating the consumer journey. And of course, we will generate some revenue from that as well. So that's a quick snapshot into what the future may look like. We're a responsible business too, and we've taken some significant steps this year to make sure that we are mindful of our role in society. We've enlisted a third party to help us calculate our carbon footprint and to set ourselves some sustainability goals in the future. And more importantly, even than that, we've encouraged our teams, so our staff internally, to create working groups, and they have created those working groups, engagement opportunities, so they can all speak together, really looking at various touch points such as employee well-being, staff engagement and social interactions at a time in post-COVID where some people are still working remotely, some are hybrid and some are working full-time in the field. So we think it's really important that our staff feel part of that journey and have the opportunity to have their say as well. We've also extended those working groups to innovation and processes and systems. So it doesn't matter whether you've been at the business for 6 months or 6 years, what level of seniority you are, we absolutely engage with our staff to see what they think and want from us and do our utmost to try and support that. We've developed on employee diversity and inclusion and all of the strategies around our ongoing training and development. We now have a dedicated head of learning and development who offers these courses and packages to our staff. We think also that's a very big step forward. I think probably one of the biggest things internally as a team is that we've created a culture to be proud of. Our new mission statement, which was recently launched, is 3 very simple words: listening, innovating, delivering. Just 3 words, but we think that perfectly sums up the ethos of the business, both internally and also externally to our customers. We are listening to our staff, we are listening to our customers, we are innovating for our consumers and our agent and house builder customers, and ultimately, as you can see from the numbers, we are now starting to deliver. So it's been crucial to us this year that we are and continue to be a responsible business too. So just to close, and then we will go to Q&A. I can see them piling up on the right as we speak. Let's move to a quick summary. So we're really pleased. We're really pleased with the progress we're making. We've had continued growth in the business, all of the operational metrics, as you heard earlier, couple that with further investment into the business as appropriate, Glancy and other areas. And we believe that is the right strategy as we continue to diversify our product offering. We've made significant strategic progress in terms of refreshing our brand, increasing our engagement levels with our consumers, and offering increased levels of value to our customer base as well, with a whole suite of products, services, and functionality designed to help our agents do their job quicker, more cost effectively, and more time effectively too. And as we just mentioned, we're evolving our own ESG strategy, which will benefit both our people, our stakeholders, and our communities too. And all that's within a relatively buoyant UK housing market, which we believe it'll remain that way at least for the medium term. So just to close, we firmly believe as a management team that now is our time to really excel, really continue to develop our business, really to deliver on the promises that were made when the business first launched. We've got a strong financial position. We've got this substantial and very loyal advertiser base who want us to succeed and want us to grow. We believe there's significant opportunity within this property ecosystem, not just with solutions for every customer journey, all of our agent and house builder customers at every point of that journey, but also in time, potentially for consumers too. And this ecosystem is genuinely vast, with hundreds of touch points throughout the transaction cycle, before, during, and maybe even after the transaction has occurred. So just to close, I think we've had another very solid year of growth. My big thanks, huge thanks to the management team, to Clive and all the senior exec, but also most importantly to all of my staff who have worked over and above and beyond the call of duty to really deliver on this pace and speed of change that we're now demonstrating. And we're even more excited about the future. Just before I close, if you want to follow us, you can do so on a number of channels. You can email us at investors@onthemarket.com. If you wish, you can follow us on social media. Twitter is @onthemarket.com. You can find us on LinkedIn, on Facebook, on Instagram, and all sorts of other channels. You can even follow me and my journey if you like on my own personal channels. But suffice to say, and we will now open up to some questions. But thank you so much for your time, and thank you for listening.
That's great. Jason, Clive, thank you indeed for your presentation, your update today. Ladies and gentlemen, do please continue to submit your questions using that Q&A tab just situated on the right-hand corner of your screen. To click Q&A, scroll to the bottom, type your question and press send. But just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Jason, Clive, as you can see, we've had quite a few questions come through. So if I may just ask you just to click on that Q&A tab, where appropriate to do so, if you could just read out the question and give your response, that would be fantastic. Thank you.
No problem at all. Thank you. And maybe we'll go to full screen so we can, so that the investors, potential investors, can see us. Thank you very much. So we'll read through as many as we can. There's quite a few. We'll go through as many as we can. So question one from someone I think who couldn't attend but sent a question anyway. What is the process for converting agents on free or promotional offerings to fee paying? What percentage do sign up versus drop out? How does the free shares work? Do they get these immediately or after a set period of time? How valuable is the share offering to these agents? That's quite a lot of questions. That's more than one question, but I'll probably pass to Clive for some of those. Let's just start with those first couple. What's the process for converting agents on free promotional offerings to fee paying?
Yeah, and really there were two rounds of this, if I can call it that. So our strategy when we first listed the business on AIM was to give longer term free contracts to build the scale of the portal and to encourage more consumers to visit to see in ever increasing amounts of property stock. But those contracts now have all effectively ended. And so the first stage of free to paying was to say to those people on those long-term free contracts, of which there were maybe 7,000 odd, to say, you've now developed the portal, we're giving you much more value back. You've either got to pay up or leave. And of course, a few did leave, as you would expect. But that all happened sort of last quarter 2020, first quarter 21. Now there are still people on free contracts, but they tend to be much shorter term campaigns. So we might go back to people perhaps who haven't listed with us for a couple of years, or have never listed with us, and offer, let's say, 500 branches a free contract for, let's say, 3 months. And in that period, try and show them that the value we can offer if they were to switch to paying. And then at the end of that, we would ask them to pay. And those sorts of conversion rates, I mean, can vary really depending on the campaign. But actually for us, it's not so much what the initial conversion rate is, because of course we can repeat this. So as I say, you can go to someone now, even if they don't convert now, they might in a year's time, or they didn't a year ago, they do now, because we're continually, we think, in enhancing the value we offer. So we'll just keep doing that process and trying to recruit numbers in that way, really going forward for the foreseeable future.
Great, thank you, Clive. Is it worth just a quick sense on how the free share options work?
And again here, there are multiple contract ways, but predominantly there were sort of two ways. And initially they tended to be issued up front, but in return for a long-term contract. More latterly, we do now do contracts where effectively the shares are issued after you've done a 12-month contracted period. So you might contract for a period, do 12 months. At the end of that, we'd issue you some shares, but the contract could roll and continue, and you might get more shares after a further 12 months, etc. So a bit of a mixture, but more latterly, it's been in arrears rather than upfront.
Thank you, Clive. I'm going to move to a couple of questions from people in the virtual room. I will come back to those who sent questions who couldn't attend, but let's go to the next question, which is Simon C. Simon, thank you for your question. Question is, what is the main driver for the recent growth? Is this a switch of the free to the paying, or the other verticals growing? Well, hopefully, Simon, you will have seen the presentation that predominantly it's been that movement up and that stepping up from free to paying contracts. There's still some way to go in that step up, but that's been the majority of the growth. But we do see, as you can see from the other bits of the product mix that we're starting to build in with the Glanty, with the software solution, with new homes in particular, we believe that as time goes on, that mix will start to spread out a little bit. We always anticipate that estate agency revenue from subscriptions will probably be one of the largest parts of our revenue stream. But don't forget also, we have our product mix. So we sell products to our agency customers too, and that is involved and incorporated into that ARPA. So we think in the short term, that's where the majority of the growth will come. But increasingly, we hope that the lines that you saw on the graph will start to spread out, and you'll see more income from those other income streams as well. I don't know if you had anything else to add, Clive, onto that.
No, I think that sums it up.
Thank you very much. Next question. We're going to Brit E. Thank you, Brit, for your question. What opportunity is there with new homes, as other portals have a larger ARPA, average revenue per advertiser, for new homes than estate agency? Good question and well spotted, Clive.
Yeah, no, absolutely true. And that is the case. I think the important thing for us to remember here about us is that this is a new segment for us. So we only launched our new homes business in September 2019. And again, as with any early stage business, we need to develop both the content, then get more relevant consumer traffic, and then generate more leads back to our new homes advertisers. And as we do that, we think we'll be able to continue to increase our ARPA. So there's no reason why over time our ARPA shouldn't be the same, or whether it's slightly higher or not, but roughly the same as a estate agency. But of course, it is a newer business for us, so we're not yet at that point. But you've seen it's growing strongly, and we hope for more of the same, and that will close the gap.
Awesome, thank you. Next question from Alana J. Alana, thank you so much for your question. What do you think is going to happen to the property market for the rest of the year? Oh dear, how long have we got? Okay, in bullet points from my perspective, we are in a market at the moment where there is almost historic low levels of stock for both sales and lettings. There is very little property stock out there, so there's very little supply, but there is still, even now, huge pent-up demand. And that's despite all of the macroeconomic and geopolitical headwinds, the cost of living rise, the mortgage interest rate rise, the geopolitical challenges in Ukraine, fuel prices, all of those challenges. Despite that, consumer sentiment seems to still be very, very positive. We know that. I think I mentioned a couple of stats earlier in the presentation, but 75% of active buyers in the UK who visited our site were confident that they would purchase a property within the next 3 months. And importantly, 61% of properties that were sold subject to contract within the first 30 days of being on our site. So 61% of all properties listed on our site for sale went under offer within the first 30 days. So despite all the headwinds, we see no immediate change to that sentiment, that real value in the sentiment and what consumers think about wanting to be serious about their property transaction. What I do see in the short to medium term is that we are seeing number of valuations start to increase. We're also seeing the number of properties coming to the market starting to increase as well. So as valuations rise, property stock starts to rise. We see a gradual leveling out of that supply-demand imbalance. What personally I think that will mean is that we won't necessarily in future months see that month-on-month growth that we have seen from the main indices, Nationwide Halifax House Price Index. I don't think we'll continue to see quite as big a step up on a month-to-month basis. I do think it will level out, but over the course of the next cycle, I don't necessarily see the market changing dramatically, bar some really big other new macroeconomic events. We don't see it. So I personally, in a nutshell, would see this as a leveling out of the property market. The supply and demand imbalance will start to rebalance itself over coming months. We'll stop seeing the really big rises month on month, and then potentially get to a more normalized market in the future. That's just my view for what it's worth. I hope that's answered your question. Moving on to Mark A. Thank you, Mark, for your question. How do you see agents onboarding your software, as change of internal systems can be a long sell, even if the benefits are large? A great question, Mark. I think you're absolutely right. Software solutions, particularly CRM software, customer relationship management software, is quite sticky by its nature, because it's quite hard to migrate from one platform to another. I remember in my agency days, I think I moved 3 or 4 times in 20 years, my CRM software, and it isn't easy to do. But the converse to that is when you do migrate, that is also very sticky to move from one to the other. I think the value proposition for us really is that portal and software communication combination. And I think that is really, whilst others are competitive in this space, we offer something that's almost unique in terms of a majority agent owned portal, majority agent owned CRM software, talking to each other and communicating with each other. It does mean that it will take time to transfer, and that's why the numbers that you've seen on the screen today haven't necessarily been a hockey stick curve, but we do see that value build over time as the conversion works. I suppose the only other thing to mention is that we are developing additional tag-on products to make it easier for agents to migrate from one platform to another. So we do see this developing over time. Thank you for your question. Want to move next question. Graham R. Thank you, Graham. Clearly, this is highly scalable. Do you include other country markets 5 to 7 years out, and roughly what revenue do you see 5 to 7 years out? Well, we don't give guidance, Graham, on where we see the future. I think what we've just talked about shows that there's more than enough opportunity in the UK market. We'd never say never, and we're always looking and talking to other businesses and looking in at, indeed, other areas, other countries. But I think from what we've demonstrated today, there's more than enough opportunity within the current ecosystem within the UK market, and more than enough opportunity within new homes, and more than enough opportunity within potentially in the future producing that end-to-end solution for customers and consumers. So it isn't something that as currently we are considering, but never say never. A question, I'll go back to just briefly a question from someone who couldn't be on the meeting. A question said, has Boomin had any material impact on the business? Boomin is a portal that was launched about a year, 18 months ago. Short answer to the question is no. It hasn't had any material impact on the business. Look, as a business of scale, we are right to make part of our daily practices looking at our competitors, looking upwards, looking sideways, and looking downwards too. What I can say is it hasn't impacted our business at all, and it's incredibly hard to build a portal. You need both time and money. Having a lot of one or the other doesn't necessarily work, as we've shown in our own journey. But we're confident in our strategy of delivering that differentiation to our customer base in the future, and we're very happy with our progress. Coming through to the last couple of questions, I think we're still okay on timings. John C has said, will you offer private landlords the option to list a property directly on the market? No, we won't. So we will always be agent-led. We are majority agent-owned. We are committed to offering fair and sustainable pricing structures for our estate agency customers. We are an agent's portal, and one of our USPs is that we do have the fundamental support of our estate agency customers, and therefore, as such, I can be very clear with the answer to that question. We won't be delivering direct to landlord or direct to seller opportunities. Our customers are our lifeblood. We value them and support them. We'll continue to do so. Coming through to the last question, Edward has said, thank you, Edward, for your question. Can you comment on the current weakness of the share price? Should shareholders be concerned about dilution as you continue to issue shares to agents? I'm going to take a sip of water and let Clive answer that one. Thank you.
Yeah, so I wouldn't be overly concerned at this point, because there are two things to note. Firstly, our authority to issue shares for agent recruitment expires later this year. And so we can't be doing it for too much longer anyway. Only where we contract with agents before that expires can we then issue them shares. And if you look, we tend to issue shares on a quarterly basis, and you'll see through the RNS where we update shares in total. And the last one, so the end of April, we issued about 154,000 shares, that sort of number. So in the scale of the whole business with 75 odd million shares in issue, these numbers are now relatively small. They could go up between now and the closing date of the authority. But I wouldn't be expecting anything too material. If there is anything more material, of course, The plus side to that would be that we must have had a lot of agents signing up to full tariff contracts in order to have any need to issue those shares. So always with these share issues, although the shares may dilute the shares in issue, there's a corresponding and greater benefit to revenues. So almost it's like an accretive acquisition. But the reality is I wouldn't expect anything too material in the scale of the business between now and the end of that authority.
Perfect. Thank you, Clive. And that concludes the questions. Thanks so much to everyone who sent in questions who couldn't be here, but also particularly those who engaged during the meeting. We really appreciate it. I'll just close now before handing back to the Investor Meet team just by saying a big thank you. Thank you for listening to us. I believe that we're on a really exciting journey. We've established the fundamentals of becoming more than just a portal. We are now starting to forge our own path and own our own lane in this differentiated tech-enabled property business. We're incredibly confident about the future. We're excited about the opportunities within the property ecosystem, both for customers and maybe in time for consumers too. And hopefully you'll agree that we're making significant steps forward. So a big thank you again to the management team, to Clive for his assistance, to all of the staff who've helped deliver on this result this year. Thank you so much for your time, ladies and gentlemen, and look forward to catching up with you again soon. And now I'll hand back to Paul. Thank you.
That's fantastic. Jason, Clive, thank you indeed for updating investors today and wrapping up. Could I please ask investors not to close the session, to be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of On The Market PLC, we'd like to thank you very much for attending today's presentation. That concludes today's session. Thank you very much and good afternoon to you all.